here. Hello and welcome to Capital Cosm, everybody. Today we have a special returning guest on the show. It is none other than Terry Papineau. Terry, thank you for coming on the show, my friend.
It's my pleasure, Danny.
Yeah, so before we get started, though, nothing on this episode is financial advice. Neither Terry nor I are financial advisors, so please do your own due diligence. With that said, Terry, number one, thanks for coming back on. We really enjoyed you the first episode. But for those who may have not caught that first episode or who may not be familiar with your work, go ahead and give the audience an introduction in who you are.
Sure. I basically started as a teacher, started my career as a teacher, and did a brief stint as a financial planner, and went back into teaching. So I'm retired from the education profession right now, but I've always had a love for investing and investment products, and also a passion for helping people understand, how money works and the different investment products and stuff like that. And in 2016, I really became interested in the uranium sector. I spent a lot of time, almost all of my spare time, just reading everything I could, watching every video, listening to every podcast, looking at different companies, all kinds of information related to uranium. And I've been doing that since then. And I've really, I think I'm known now for being 100% all into the uranium sector. I know some people think that's crazy, and it probably is, but so that's who I am and what I do.
Yeah, the legend himself, Mr. 100% uranium.
100% uranium.
Yeah, so uranium, let's just dive right into it. So nothing has changed in your portfolio in regards to your uranium allocation. You're still 100%.
That's correct. Yeah. What I've done some repositioning. I mean, since I started buying uranium equities in 2017. And at first I started with the more well-known names, the producers, the developers. Mm-hmm. And as I became more comfortable with the sector and being more comfortable with the risk level and more convinced of, the compelling fundamentals, I switched my allocation to a riskier, more speculation type portfolio, where about 60 to 65% of my positions are in explorers in the Athabasca Basin, and the remainder of my portfolio is in past producers or developers in the United States and developers in Africa.
Nice. Well, I noticed you said you started watching and keeping track of uranium in 2016, and then you started buying in 2017. So it took you about maybe a little under a year to really build up the conviction to put some skin in the game there. I'd like to point out that you actually timed it quite well. If you look at a uranium spot price chart, the technical bottom of the market was in 2016. So the time you got in was just like, as good as it gets almost. So kudos to you there.
That's exactly what got me interested in it. The information I was getting at the time was, this is a real bear market. And there's just no love in the sector, and there was value in some of the companies. And at that time, it was Cameco, I would say, and other developers. And the share prices were just depressed back then. It was very difficult for companies, especially explorers, to obtain money to do anything. So they were just basically trying to keep, not Cameco, but the explorers, anyways, were just trying to keep the lights on with no money coming in. And so I figured, there was maybe 40, 45 uranium companies all, throughout the world at that period of time. And I figured, if they were able to survive that just brutal bear market, these were the quality names that were kind of left, the survivors. And I just basically started to invest in, like I said, at the beginning it was producers and developers, and then I shifted more to a explore, develop, past producer portfolio.
Have you sold any since then?
The only moves I've made were as information comes in, depending on like, because I'm mostly in explorers, depending on what the results are, because they're trying to find something, and the information we get are news releases on their drill programs or whatever they're doing. So, and I also sold some names to move out of the larger names into more of the smaller names. But these moves were made more in the early stages, like maybe 2017, 2018, 2019. And I'd say probably since about 2021, my portfolio has remained mostly the same. Although in the fall of 2021, when we had that really big run up, I did sell 50% of one of my largest positions in one of the explorers to reallocate money into other explorers that I preferred the information that was coming out at that time.
I see. I see. So moving forward, do you have any set strategies in mind in terms of how you plan to sell and exit your positions?
Yeah, basically, it's no set rule, no set rules. Like Andrew Weekly from Smith Weekly did some awesome work on this probably 4 years ago, and there are people that talk about different exit strategies. So for me, it's going to be especially dealing with the explorers, because you have to really be on top of what the information is with regards to their drill programs. And it's not an easy thing, even though they're in the Saudi Arabia of uranium in the Athabasca Basin. It's no easy thing to find a uranium deposit, so they're working really hard. And each drill program brings new information. So as information comes out, if it looks like it's going to be a dead end street, or if there's no more sort of avenue for that company to move forward, then I might decide to sell and exit some positions. Right now we're sitting in a really nice place in terms of the setup for the uranium fundamentals. They're the best that I've seen since 2016. And so I'm just going to be, one of the major factors that I'll be looking at is what's going on with the macro picture. What's happening with the contracting cycle? What's happening with the spot price? Is there still momentum in the space? Are we still, announcements of more nuclear reactor buildouts, SMR buildouts, that kind of thing, to see, is the sector as a whole, are we peaking? In my opinion, is it time to start exiting some positions? And I'll be doing that. And I might start taking profits as well, depending on what I see with how the spot price is moving, how the sector is moving, how the equities are responding, what the sentiment seems to be in the sector. I might be, taking a bit of profit off the table, or exiting certain positions completely. It's not a fixed set of rules. It's going to be quite fluid depending on how I see, the sector playing out and the fundamentals playing out.
Yeah, so you mentioned that the outlook, in your opinion, today is the best it's been since 2016. What are those factors that play into that statement there? What do you think are some of the things that are just hitting it out of the park?
Well, I think the best way that I can explain it is it's right now it's all systems go. It's all systems go. It's if you look at the last 2 months this summer, which is normally a slow period of time, and if you also look at the spot price movement, so the price of uranium itself, on the spot market, for a period of time, let's say from January to now, where there's been very little activity on the spot market from financial players, such as Sput. Zuri Invest did buy some pounds sometime, I believe, around the end of May or in May and June. I don't know if they're still active at the moment, but where there's been very little activity from the financial players, the spot price increased by about 20% since the beginning of the year. And what's also remarkable about that is that it continued to increase in the summer, in July and August, when it's normally a very, very slow period of time. So, that's a great, that's a really good news story. But on top of that, it's not just the spot price that's been increasing. We've seen the best contracting volume this year since probably 2011, 2012. So far we have 119.6 million pounds of uranium that have been signed under contract. The annual demand for uranium, let's call it somewhere between 185 to 200 million pounds. We're not at replacement volumes yet, but it's really a good sign that the contracting activity has increased. And if you look at every other product and service in the nuclear fuel cycle, there have been increases for those products and services this year as well, substantial increases. So everything in the entire nuclear chain, nuclear fuel chain, is up. So that's great news. SPUT itself, the Sprott Physical Uranium Trust, it's been at a discount to NAV since February. It's just been at a deep discount to NAV until yesterday, where it crossed into premium to NAV for the first time since that period of time.
Really?
And was able to issue shares yesterday and take in money yesterday. So I'm not sure if they were able to do that today, but they were bouncing into the green at different periods of time today. And so they may have been able to issue shares again today. I'm not sure. But that's a great sign too, because if you look back at 2021, in the fall of 2021, we had an outstanding run there that was driven by SPUT at the time. The Sprott Physical Uranium Trust had just acquired what was called Uranium Participation Corp at the time. And in August, SPUT started buying uranium. And when they started buying uranium was at $30 a pound. The spot price was $30 a pound when SPUT started in 2021. And they drove the price to $60 a pound in about 6 weeks to 2 months. And in that period of time, the uranium equities went up 3, 4, 5 times, depending on what equities you held. So, there's not a lot of wiggle room with this commodity. And when the commodity moves, the underlying equities really move because there's so few of them. And as I was mentioning, in 2016, when I started looking into this sector, there were only about 40, maybe 45 uranium companies at the time. Now we're maybe at 85, 90 uranium companies worldwide. So the fact that there's more uranium companies entering the space is another indication that there's more interest. People know that the sector is heating up, and I believe that we are actually in a uranium bull market.
Yeah, I mean, I agree with you there. I mean, we've gone up 20% year to date, kind of like you alluded to very little noise on places like Twitter or X, if you want to call it that now. Compared to where we were a couple years ago in the highs of 2021, we were at about this price level by way of the spot market, but the miners were well ahead of where we're at today versus where we're at today, right? I think we're still like 25 to 30% discounted in the miners, given the current spot price of, when you compare that spot price, those mining stock prices in 2021 to today. So
that's correct. My portfolio. So we're sitting. I think we crossed over today the $60 threshold for a spot.
Yep, 61.
And if I compare the value of my portfolio now to the value of my portfolio in 2021, when we were at $60 spot price, my portfolio is still down 50%. So I think that the equities will be catching up at some point in time. I think people are just want to see the pudding. They want the proof needs to be in the pudding. We've had several sort of you know, I'm not going to say false starts, but where it looked like it was going to take off and money piled in, but money was taken off the table just as quickly as it piled in.
Yeah.
So I think a sustained, contracting cycle, a sustained high level of spot price, and maybe less uncertainty in the general markets as well, and then money's going to pour back into the sector.
Yeah. I mean, you look at these ETFs like URA, URNM, you've had like four big humps since that big peak in 2021. And that's really your money piling in and then getting rug pulled over and over again. Up until I think when we finally broke out of that pattern, that consolidation pattern, was around a couple months ago. And we've been steadily rising without any sort of attention from the likes of FinTwit there. So, you mentioned being down 50%. If you have any extra capital, do you allocate it to those companies that are down 50%, or do you allocate it towards newer different companies that you don't have yet in your portfolio?
That's a good question. There's a few names that I would have liked to have gotten into that I wasn't able to. But if I had powder right now, there's a few names that I have in my portfolio that I would be putting more money into. They're still lower than what they were in 2021. And we have 2 years more of information in these companies here and in these explorers. So that, when you put money into exploration companies, you can't say it's investing, it's speculating. But, with each drill program, you obtain more information. And for example, one great example of that is F3, which used to be Fission 3.0. They stayed down for a long period of time. They actually went down quite a bit from the fall 2021 highs. But last year in their fall drill program, they really hit a couple great holes, and they followed up with some great holes again this winter, and they're drilling this summer again. And so, ask anyone in the uranium sector or mining business, where's the best place to find uranium? And that's where you've got uranium. So, they've got a lot of smoke there, so there might be some fire, and finding a mineable, sizable deposit in the Athabasca Basin can be quite a lucrative home run.
I see. So back on the explorers, then, you've got 60% deployed in explorers. How well would you say your portfolio's kind of performed against a benchmark like the URA over the course of since 2017 to date?
I think that it's performed probably. I think the beta is higher in my portfolio, given the fact that I have such a large percentage in explorers, and it's a handful. It's 9 to 10 explorers in the Athabasca Basin. I have three of them those explorers that have performed very, very well. One that has really underperformed quite a bit, and the other ones that kind of held their own. So because the risk is higher, the beta is higher, I think that I probably underperformed URA, but I mean, I knew that going in, and I know that if you want the higher ride up, then you have
Yeah.
to be able to accept the higher ride low, and I'm just exercising patience, and in that period of time, the setup has just gotten better and better and better. I say this all the time. People are going to be tired of hearing me say that, but this setup is outstanding.
Yeah. I mean, I agree with you 100%. We were just looking at total market cap of the sector, and we're sitting at about $45 billion in total market cap across all the mining stocks. Now, if you rewind all the way back to 2007, we had reached a market cap of 150 billion, right? So about three times more in terms of what we have today. But the catch is there is a lot more money in the system today than there was back then too. So if you look at the U.S. money supply, it's actually tripled since 2007. So that can kind of give you an idea in terms of how much potential energy is kind of laying dormant with this sector. It's kind of unbelievable. And then when you peel the onion back even further, you'll notice that between Kazatomprom and Cameco, that's about half of the total market cap of the uranium sector. So then you're left with the remaining, what is it, like 20 some odd billion that are just like juniors and explorers. That's it. It's $20 billion.
That's correct.
Yeah.
Yeah, I heard you discuss this in your Rick Rule interview. I told you I was going to watch it.
Oh yeah, nice.
Uh, but you're exactly right. And I've talked about this before. Like the 2007 high, when the price of uranium, the spot price reached 138 or 139 dollars US. Let's call it 140. That was in 2007. That's 16 years ago.
Mm-hmm.
As you just alluded to, there's way more money in the system, in the markets, just available today. I mean, that brings about other problems, but so, if we just take the peak market cap of the total sector in 2007 of 150 billion, and where we're sitting now, let's call it 50 billion.
Mm-hmm.
So, for us to go back to the peak of 2007 would be a three-bagger on average. What I remember reading and hearing about the 2007 bull run was, the lowest return on one of those companies was 22x your money. If you had
Mm-hmm.
really bought that company at a low and ridden it to the peak. So, I'm not saying that we're going to see a 22x, but what I can tell you is that some of the companies in my portfolio, ISO is a great example of that. I bought those shares. The first shares I purchased were at 40 cents. And those shares in 2021 went up over $6. So so the shares that I bought at 40 cents, that was a 15x. Now they came back down, but it's still a pretty good return so far. And I believe we're on the next leg up. So, for me, it's going to be exercising more patience, just really paying attention to what's happening in the market. And, like I said, I think the setup is the best it's ever been. And I think we're going to be rewarded handsomely for our patience.
Yeah. I mean, can't disagree with you.
Yeah,
there.
I'd just like to mention something else too. In the last bull market, you talked about the market cap, but Rick Rule also talked about the number of companies. And when that bull market started, they started with about 40 companies, and at the peak there were 450 to 500 uranium companies.
Mm-hmm.
So I think we still have a long way to go in this market. As we've already discussed, we went from when I started where there were about 40 companies. It went all the way back down to 40 companies. And now we're maybe at 85, 90. So I think that there's still some healthy gains to be had for someone that, does their homework and is patient.
Yeah. It's kind of embarrassing when you kind of have to put when you want to put like a forecast in terms of the price and it's just like so absurdly high, you don't want to, you kind of play it down a bit. That's kind of how I feel with the uranium price now, because the way I see it, I know Rick Rule said he doesn't see it going back up to 140, but given the current, like the way the market is today versus what it was back then, you've got a lot more participants. And number one, you've got a lot more participants in the market. Anyone can just download a Robinhood account and start trading now, versus back then. You just didn't have these people in the arena. Now you do. You have, the social networking effect where memes travel. Information flows a lot faster so that you can get a lot. You get like these huge run ups in like these meme stocks and so forth. That could
Yeah.
easily be, once something like uranium starts gaining traction, I could easily see like retail just flowing into this thing, like crazy. So
Right. And that's what occurred in 2021 when this price of uranium started going up. And people had been saying watch uranium for a long, long time, and then when it started happening, a pile of money piled in, a lot of money piled in, and then a lot of money piled out.
yeah,
Uh, I think what Rick also explained is that the price of uranium, the spot price of uranium, doesn't have to go to 140, but it could go there. There's no
yeah,
reason why it couldn't go there. And I think that, as you could tell, I consume a lot of information related to the uranium sector. I'm on every single chemical conference call. Anyways, that's just one of the things that I do. But you listen to the guys from Chemical Talk, and they'll tell you, these people they're veterans in the industry, and they'll tell you that they've never had a uranium bull run start at the point where we're starting now. And the fact where we're at about $60 a pound uranium now, and it's starting to heat up again. I mean, there's no reason why it wouldn't reach $140 and might not go even higher. We just don't know what's going to happen. Again, the price moved up to $60 a pound, over $60 a pound today without any activity from financial players. So as soon as Sput is back into premium to NAV territory and they're issuing shares and taking in money, and then once they have enough money in the kitty and they start buying uranium again, you watch how quickly that spot price is going to rise. And people have seen this movie before, like the guys from Chemical, they say it all the time. We've seen this movie before. And when that uranium spot price starts to run, I mean, it runs hard and fast. So who knows what that price will be? There's other very, very knowledgeable people in the sector, with a lot of experience as well, who think that it could go quite higher than that. We try to be tempered in our comments in terms of nobody really knows how high it's going to go, but I know that it's going to be higher than what it is now. And I'm personally believe that it's going to go above $100. I don't want to make any prediction because I don't know. Nobody really knows. Once it starts to run, who knows?
yeah,
But the financial players are going to get involved and they're going to drive it. And one of the things that is really important to mention is that, the commodity itself reacts differently to what people expect is going to happen. So the law of supply and demand is, when the price goes up, well, there's more supply, or more people are willing to supply it. Whereas in this case here, as the price goes up, people or entities that have uranium are going to hold on to it because it becomes more and more valuable. It's going to be more and more needed. So, yes, there's going to be uranium available, but that's one of the reasons why I believe that's one of the reasons why we've seen the price of uranium go up by 20% this year, even though there's been hardly no activity from financial players, is that the available uranium, people are no longer, there's not a lot of, uranium that people are willing to throw around like, 5-6 years ago.
yeah. I mean, it seems like Sput kind of cleaned the market back in 2021 and 2022, and they haven't been really purchasing nearly as much as they were back then over the last year or so. And so I think this is a very important point to highlight is this price move, this 20% price move is driven just organically without any vehicles, without any financial vehicles behind the wheel. So, I kind of want to shift over to some of your convictions. What are some of your highest conviction plays at the moment in the uranium space?
Are you talking about specific names or just?
Yeah, like companies in your portfolio that you have kind of you feel better about than the others?
Well, so again, like I, I, you know, you said if I had money, would I deploy? Like I own Global Atomic. I think if I, you know, if I had money to put into the market right now, I'd be buying shares of Global Atomic because what I tried to do as I was deploying money, and this is true for the explorers as well. I've been asked in the past, you know, what's your top explorer? Well, at that specific period of time, I'd look at the different explorers in the Athabasca Basin, look at their market cap, look at okay, are they, you know, so let's say these 5 or 6 companies are currently drilling to try to find uranium. None of them have found uranium yet. So how can I compare the quality of one to the other? Well, you look at the property, you look at the management, you look at, but basically they're in the same game. So if I look at the market cap, if one is valued at 70 million and the other one's valued at 10 million, I see more value in the company that's valued at 10 million. So at this specific point in time, I think Global Atomic is a good buy. You know, there's, of course, the price of the company has gone down because of the geopolitical, because of the coup in Niger. And so there's a lot of uncertainty around that, and people are nervous about that, and I understand that. I believe that those things tend to work themselves out with time. I think that's what's going to happen with this specific case. So that's one of the plays that I'd be making right now.
Got it.
In the explorers, you know, I really like